Markets have been hitting all-time highs, but trade tensions continue to cast their shadows. So what would it take for the S&P 500 to reach the 7,000 level? Let's bring in Jim Thorne, Chief Market Strategist at Wellington-Altus Private Wealth. I saw you laugh at that, but that was your prediction, I guess, some time ago. Do you still stand by it?
Yes, nothing's really changed. Tariffs don't cause inflation. If you read The Art of the Deal, we know that, you take Mr. Trump seriously, not literally. Wall Street and Bay Street sold the bottom in April. They're underinvested. The economy's doing fine. We're not going to go into a recession, growth slowdown. And the Fed's going to eventually cut rates and bring the Fed funds rate down to about 275. So we climb the wall of worry. This is the most hated V-shaped recovery in my generation.
Why do you say that? The most hated?
Because people, they sold the bottom. They blinked in April. They sold it. I worked in the States for a long time. Wall Street is Democrat. They don't like Trump. They don't like his policies. We're moving away from a Keynesian policy to a much more Adam Smith or University of Chicago supply side type policy. So there's a lot of consternation and a lot of people are offside. And, there's going to be performance anxiety, what we call bull market stress. And I think you're seeing it today. And
you're talking about a slowdown in the economy, but you're saying no recession to come.
Right, because 75% of the United States is service-based. So, Morella, the only time in my career where we've had a recession is when we've had a massive exogenous shock. So can we have a slowdown because of the detox period going away from depending on the government to shifting towards the private sector? Yes, of course, we should expect it, but we shouldn't go into a recession. And if you look at the data, as long as we don't go into a recession, the pain trade is north, then we're going to go much higher. And it'll be very interesting to see how long Wall Street and Bay Street can maintain their bear stance.
You mentioned that both are underexposed to risk assets. Why do you think that is?
I think they thought that the tariffs would really hit the economy hard. I think they thought that what happened in Israel, another black swan event, would hit the economy hard. And this market is very resilient, and we just keep marching higher.
Where's the resiliency coming from? Because in April, as you mentioned, there was a lot of doom and gloom. Is it the fact that Donald Trump has, introduced and then backed out the whole taco scenario?
Yeah, they call it taco, but it's really, it's chapter 2 of The Art of the Deal, where you come in very aggressive and then you pull back. I look at what Mr. Trump is doing and what Prime Minister Carney is doing is basically two sides of the same coin. They're moving back to the center, and we're getting a much more centrist economic policy. And if you ask me, that's the underpinning and the fundamentals behind the market. We are moving away from a period of time of extreme economic policies to moving towards the center. And that is very good for risk assets.
You also mentioned you expect where you see the rate going in the U.S. I'm wondering the divergence between Canada and the U.S. What do you think of that?
Well, Canada is going to have a balance sheet recession, and in the sense that the consumer is over-levered. So what will happen is, as the Bank of Canada cuts rates, we won't see a response in aggregate demand. We'll see them de-lever or get their balance sheet in order. It's exactly what happened to the American consumer after the global financial crisis. And so Tiff Macklin was aggressive, got to neutral, which is 275. He's had the right to pause. And you're not seeing, unemployment in Ontario is 7.8%. It's 7% nationally. We're not seeing economic growth. He needs to get the interest rate down below 2%, which I think he will start to do in the fall.
Let's talk about where you think people should put their money these days. What does that look like?
Well, the traditional playbook would be when the economy slows and you start to see liquidity increase, you buy secular growth, which would be the NASDAQ 100. The other area is Bitcoin, and Bitcoin has just broken through 113,000, and that's a critical level. Next week, Morella, we have what we call Crypto Week in Washington, where you have the Genius Act and the Clarity Act passed, where digital assets become codified in the industrial policy of the United States. So that's the traditional. But what you're also seeing, if you would look at home builders, you're starting to see money position themselves for the Federal Reserve. If it's not July, it's September, to really start to cut rates down. So if you look at home builders or interest rate sensitive areas, you're really starting to see some bid there. Look at regional banks in the United States as well. So the smart money is getting themselves positioned. Small cap is also starting to outperform, and that's sort of the dash for trash, and that's an emblematic of a performance anxiety because they've missed and they're underperforming. So we're starting to see the remnants of or the development of a very bullish stance going into the midterm elections next year.
Yeah, which is where they want to be for the midterm elections next year. You talk about a triple witching, I guess, September.
Yes.
Remind us what it is and what that looks like.
4 times a year, we have a period of time where all the options are basically come due on the same day. And typically, they are very, very volatile areas. And there's this old trading rule that if you're in a bull market and the stock market's going up, then the market goes down in options week because they try to make sure that the most of the options expire worthless. So September is seasonally a very weak period, and it's also a very volatile period because of triple witching. But you also, when you overlay the Jewish high holidays, which is Rosh Hashanah and Yom Kippur, we would expect a rally into the third week of September and then a nice healthy correction, and then we rally on into the